This episode of FinCrime Unfiltered with Sarah Beth Felix is brought to you by Castellum.AI, the real-time AI agents and screening platform keeping banks, fintechs, and governments ahead of financial crime. Whether you're navigating sanctions or watch lists, Castellum.AI helps you move fast and stay compliant. No outdated databases, no manual processes, just lightning-fast intelligence you can rely on. Visit Castellum.AI to see why compliance teams are making the switch. That's Castellum.AI. Hi, and welcome to episode 21 of FinCrime Unfiltered. I'm Sarah Beth Felix. Thanks for joining us again. This whole show today, I'm going to be tackling, unraveling, opining, punditing about the remarks made by the Undersecretary for Terrorism and Financial Intelligence, John Hurley. He was at the ACAMS Vegas conference this week, and he had some things to say. And so I think it would be good to talk frankly about some things. But before I get to that, please don't forget to keep sending us emails, FinCrimeUnfiltered@illicitedge.com. And please don't forget to like and subscribe. So this format's going to be a little bit different, today's show specifically, because I want to go quote by quote, not his whole statement, but I do want to quote him accurately. So we're going to, if you are not listening or if you're not watching this on YouTube and you're only listening to it on Spotify or other channels, the YouTube video version will have the actual quotes by Mr. Hurley, along with a rating of thumbs up, thumbs down, or neutral. So if you have not watched it yet on YouTube, please take the time to view the video as we will be going through quote by quote. So just kind of kicking it off, I think at a 30,000 foot level, the statement made by Mr. Hurley this week, he talks about some issues that he's noticed during his career and that he's received solicited and unsolicited advice and opinions. He's probably it's probably been drinking from a fire hose during his time there at the Treasury. But overall, he calls for an improvement in the BSA and how it's carried out in the regulated financial institutions. And so there are some glimmers of hope in some of the things he talks about, some things I've long lobbied for. And then there's some things where I'm like, wait, we're cart before horse in this one, right? Like, stop doing the cart before horse. So I would love to hear your take on it, but for the next few minutes, we're just going to go through some of his more impactful quotes. So the first quote is, as everyone in this field knows, there are useful SARs and not so useful SARs. Regulatory pressure has led to more and more of the not so useful SARs. First off, true. I think we all can say that as a former AML officer, as an interim AML officer right now for my de novo bank in Vermont. Working with AML officers from both regulated fintechs and MSBs to community banks and regional banks and credit unions, I can say true. I think most people, 99.9% of the SAR filers and the consumers of SARs, right? I train federal law enforcement agencies, and I can say both sides, the producers as well as the consumers of SARs, I think most people would say true. This is an accurate statement. So thumbs up. But the fix for this, for me, is not necessarily some of the things that he points out. I think there are multiple changes that have to occur. And one of the things that we do need to change is what I call the satiety point of regulators. Most of our regulators are not singing from the same hymnal. They're not, reading their plays from the same playbook. And it's been... it leads to a lot of unfair exams, unfair consent orders, where banks, credit unions are told, you're fine, you're fine, you're fine, exam year after year, exam after exam, you're fine, you're fine, you're fine, and then boom, they're not fine. And we saw that, and I posted about this continuously over the last several years of breaking down consent orders. So I think that's one of the things that has to change. And he does tackle that a little bit later on, but I think the useful SARs and the not so useful SARs, there's many reasons for that. And I think one of the main ones before we try to fix everything else is the God with a little g that most regulated financial institutions have to serve and make happy, which are their regulators. Okay, second quote, complexity is also a major problem. The fact that instructions of completing a SAR are 170 pages long illustrates the challenge. One, I think it's reaching for the most part to state that the instructions are 170 plus pages to fill out a SAR. That's for the complex way in which SAR filers, electronic SAR filers, have to file a SAR. That's not for the actual user, producer of the SAR when they're filling out a SAR. So I think on this one, I'm neutral. I think we could have made the point that it is complex, but the 170 plus pages to fill out a SAR, that's the XML instructions for the actual automated filing that all of the AML systems have to ingest. I do think it is complex to that point. I don't think it has to be that complex, but I think saying that they have 170 plus pages of instructions and not qualifying that's actually for the automated electronic filing is a little bit ignorant. I hope that's not too harsh. Third quote, such complexity is not just a waste of your effort and resources, it also increases the likelihood of errors, making the underlying data less reliable. So the issue with this is that the SAR form is not aligned with how financial institutions find and investigate potential SAR activity. And overall, I think financial institutions are trying their hardest, given the limitations of some of the technology that is, flooding the market, in trying to throw what we think matters at law enforcement and hoping some of it sticks on the wall, right? We're just kind of like chucking these SARs in there. I think most people in the industry know that the end consumer of SARs are our partners in this, and we want to give them highly effective, timely information. But we also have another God with a little g to serve, which are our regulators. So of course, there's errors in this. The underlying data is less reliable, and I don't know if it's a waste of our effort and resources. I don't know. I felt like that quote just kind of struck me like just like a little kick to the shin, not like a major kick to the shin, but just a little kick to the shin on that one. So he goes on to say that current compliance rules lead to financial institutions often spending, quote, significant amounts of time and money flooding the system with what he goes on to say are essentially low value alerts, but basically structuring. And before we fix this end result, I think we need to look at what is causing that. So the SAR form has not been updated in a hot minute, years. And by hot minute, I mean years. The boxes don't make any sense. The transaction types are jumbled in with typologies. The boxes for typologies don't even come close to resembling the national priorities or the underlying suspected activities. And it leads to financial institutions guessing, right? And financial institutions can only guess so much. And as someone who has worked with the end result of all of these SARs, I will say that it is very difficult to look at what a financial institution has filed as a filer of them. And it's hard to say, hey, I can see the whole picture of this particular activity that I'm filing on. And I believe it's tied to this suspected underlying activity, SUA. It's very difficult. So what the institution does is they select the checkboxes that they, just kind of generally this is money laundering, or generally this is suspicious activity as it relates to the movement of funds. And it makes law enforcement's job harder because they're looking for certain typologies that don't necessarily fit into what financial institutions are trying to define. So it just ends up being, square peg, round hole type of situation. He goes on to talk about structuring and says, quote, similarly, banks spending significant amounts of time and money flooding the system with structuring data on businesses they know are legitimate is a foolish waste of time. Oof. I felt like this one's a... I mean, I guess my initial response to this is then change the structuring law. Like, we can't just say that financial institutions think that a source is legitimate of cash and therefore that customer is not structuring if the manner in which they're conducting their transactions is actually to avoid CTR reporting. That's the structuring law. So let's make, those a little bit less complex, pure reporting, if you will, where it's a structuring checkbox that the legitimacy was found to be okay. But again, the financial institution is taking their best guess effort. I mean, most people, and I have an old article on this, like from over a decade ago, called Structuring, You're Probably Not Getting It Right. Because I think a lot of institutions don't get structuring right because they're only solving for one of the two issues. They're either solving to say, oh, this is totally legitimate and how in the source of these funds, and the way in which they're conducting their transactions doesn't really matter because the source is legitimate, or it's vice versa, where they don't take the time to figure out if the source is legitimate, but I'm sure they weren't structuring in the manner in which they were conducting the cash transactions. Therefore, it's not structuring. So, I mean, I guess the fix for this would be maybe let's do what Canada does, right? And other countries, where if there's a certain dollar amount, certain cash dollar amount, at that threshold, that we just simply report it. If it's, 10,000 and somebody aggregates to that day in 10,000, boom, it's just an automated, hey, this person had $10,000 or more, whatever the dollar amount is. And then change the structuring law to say it doesn't matter if they try to avoid record keeping requirements. That's fine. I don't know. I don't think that's a good thing, but I don't think coming out and talking about structuring data on businesses that banks know are legitimate is a foolish waste of time is helpful when we have a law talking about the manner in which a person conducts the transaction to avoid record keeping requirements. So I have more thoughts on structuring. If you want a copy of that article, please feel free to reach out on LinkedIn or here, and I will send you a copy of it. All right, the next quote, we also need to encourage the development of much better mechanisms for communication between you and our law enforcement and national security partners. And we need to let you know what is valuable and what is a waste of time and cut the time between you seeing it and them knowing it. 1,000,000% accurate. If I could give 10 thumbs up, I would. The consumers of SARs, federal law enforcement, must be given effective information in a timely manner, right? And I say this all the time. That's the whole reason why we do any of this, from CIP to CTRs to beneficial owners, is because all of that data feeds into the ultimate process of finding suspicious activity, reporting it in a highly effective, timely manner to our law enforcement partners, full stop. So my question is, the government trusts us with national security letters. They trust AML officers with SARs. Why wouldn't they trust that same individual that has access to the SISS system for FinCEN and the 314A list? Why would they also not trust that same individual with some type of indicator that what was filed was helpful and to keep going? It can literally be a thumbs up, a green light, a yellow light, right? Something that says, hey, this SAR that you filed, yes, there's cases that sometimes take years and years and years, and that's due to several issues, one of which is the subpoena issue, which Natalie Loebner's hard at working on that. But I think preliminarily, I don't think that's a word, but on a preliminary basis, that we could have something where it is a green light, like, hey, this is a great this is a great SAR, this is a great tip, please keep it coming. That right there is a feedback loop that financial institution can go, oh, great, this SAR was useful. Let me go take the specifics of that SAR, that typology, and go use that essentially as a cookie cutter retroactively to see what other customers are conducting the same type of activity that was found to be helpful in this one SAR. And I think that's something that, reduces the less than useful SARs that he talks about. The next quote, a reformation of the examination system will shift towards assessing outcomes objectively. Again, yay, 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 yay. We need funding, essentially. We need all of the examiners, yes, even the credit union ones, all trained with a new satiety point for threat-focused programs. There's too many regulators that expect a financial institution to be drowning in useless alerts. Even now, under this administration, I'm still seeing it. They make a change, and it's a change for the better. Their indicators of effectiveness, which I will talk about a couple different times today, are increasing. Yet their examiner is so used to 10,000 alerts, of which, 9,500 of them are completely useless. They don't even result in cases or investigations, much less SARs. And as soon as you start chipping down that 10,000 to 4,000 highly effective, targeted, threat-focused, threat-supported alerts, the regulators have a conniption, and we cannot have that. And that goes back to my first point about all of the regulators and examiners have to be singing from the same training hymnal about what to expect, what is effective. And so I do agree with this, but we can't just say that. We have to go fix the predicate issue, which is examiners have their satiety points set to have most institutions at a 1% to 3% effectiveness rating. And if you try to go beyond that by either changing the number of alerts that you're getting or some of the criteria, you will get knocked around for it. And that's very unfair. Next quote. The best measures of the effectiveness of a program are not how it looks, but first and foremost, how well it captures and proactively reports what law enforcement needs. Yay, again. On the effectiveness NPRM that we had, I published for public consumption my indicators of effectiveness. I've long used this term. I've used it for almost a decade. I've written about it ad nauseum. If you've ever seen me speak in public, I do a lot of public speaking, and I'm always talking about indicators of effectiveness, right? Everyone and their mom came up with this effectiveness definition, from Wolfsburg to FATF to FinCEN, and we all just kind of had this academia view of effectiveness. Great. What does that mean in practice for the thousands and thousands and thousands of financial institutions, specifically in the US? And that's why I take the approach of an indicator of effectiveness. So, instead of measuring a financial institution against whatever that examiner is used to, whether it's the prior exam or the exam they did for, a peer institution, we need to define at the federal level in the boot camp that is under the National Defense Authorization Act that was in there but has no budget. We need to have examiners all singing from, again, the same hymnal. I think that's the fourth time I've said it. But the hymnal needs to be about indicators of effectiveness, because those are ones that, for the most part, 80% of the indicators of effectiveness that I have are a one size fits all. It doesn't mean that those values assigned to those indicators of effectiveness, the ones that can be quantified, are going to be the same, but the application of the indicators of effectiveness for the majority of them are the same in a $500 million institution as they are in a $1 trillion institution. They're the same type of questions, the same indicators. Of course, the numbers are going to be completely different on the ones that are quantified. But my point in that is that I love this quote. I would love for them to listen to anything I have to say. I've submitted unsolicited letters. I think I've been part of that unsolicited stuff to FinCEN about this. And I think this type of statement is 100% accurate. And I just hope they go a step further and start looking at indicators of effectiveness. All right, next quote. When, for example, a financial institution invests the time and money to experiment with AI and successfully drops its false positive ratio and escalates vital information to law enforcement more rapidly da 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 da. He's basically, it's a whole sentence, but he's saying that that's a good thing, right? He doesn't want examiners to criticize that financial institution when they've used AI successfully and it drops its false positive ratio. The intent of that sentence, I agree with. My issue is that, of course, we're going to plug AI here. And I have mixed feelings about leading with this. And I've said this multiple times on LinkedIn, as well as a few of other podcast episodes. As we've seen in other penalties across the world, AI is not a panacea in the financial crime world. And I'm getting tired of saying, and I'm sure y'all are tired of hearing me say, that AI is only as good as the humans that train it. So, for me, let's start with a threat-focused technology capability, like some of the vendors that I recommend offline, and then get to the use of AI. But taking technology like AI and using it as a broad brush statement, unfortunately, it gives unregulated AML tech companies a pass, if you will, to haphazardly deploy AI when their FI, when the financial institution has no clue in what area, in what capacity, who trained it, is it in the decision-making process? Am I not seeing an alert because AI is sitting somewhere in the background? So I'm not anti-AI, like I've said before, but I am pro-AI when it's clearly defined, clearly restrained, right? We use AI in this function, and our AI was trained by XYZ. That type of usage of AI is good, but having a broad brush statement like this that comes out of the gate, this unfortunately is going to be used and abused by both the AI, AML tech vendors, as well as board and bank executives when they're trying to make the case that we don't need people because now we have AI. So I think on that one, I give it up. Okay. He does address excessive SARs that can lead to debanking. I'm not going to do the quote on that one. But if he's reaching back to the weaponization report from the House Financial Services Committee hearing last year, I think it is inapplicable. And I think it's not right-sized and it's ill-fitted for what we're doing here. Excessive SARs can lead to debanking, but I think that's a very small part of what happens, and that's not necessarily something out of all the things we need to fix. I don't think that's something that should be on that list. Next quote. He said, even worse, when one leads the institution to make a business decision to debank these customers, it is both unfair and economically destructive. For me, this is the most damaging statement of all. This is literally why so many banks went under expensive consent orders, because they chose fairness and the board executives chose, well, this isn't fair. This isn't economically constructive for my friend who banks at this bank. And now we get this statement that will live forever, right, for all the people live at the ACAMS conference, as well as the statement that the Treasury put out. And this type of statement to me is damaging because it's basically telling the AML officer, you have no grounds to stand on if you feel like something is not right with this business and you want to exit the business or you want to file a SAR and your board or executive management has a problem because it's unfair and economically destructive. So with that kind of statement, I mean, I'm not a lawyer, but like the second thought in my head was, are all these lawyers that are representing these banks that went under super expensive consent orders going to leverage this statement to get out of jail free? Not technical jail, but consent order jail? I don't know. All right, he did talk about continuing activity SARs. I'm hoping they won't throw this out altogether. If I had my way, my kind of like magic wand, I would appreciate a simple checkbox to the original SAR within the filing database. Is this activity ongoing? Yes, check, with the updated total dollar amount. Nothing else needs to be rewritten. We don't have to write the whole narrative. We don't have to fill out all the subjects again. If the same activity is continuing, it should be an update to a dollar amount and a yes, no, radio button, checkbox, I don't care, that says, yes, this activity is ongoing. If it's no, then a quick no SAR filed explanation, and I'm not talking about the ones he talks about in his statement, where he says that the no SAR filed process is very clunky and very inefficient. I do agree with that. But I think it is helpful if you filed a SAR and you decide, oh, this activity is not continuing. It's helpful to have 2-3 sentences, not a SAR narrative, but 2-3 sentences available for our law enforcement consumers to say, hey, I'm no longer filing on this person because we exited the relationship, or because they went bankrupt, or because they finally stopped conducting their business in this manner because they received a CTR counseling pamphlet from FinCEN, right? Whatever the reason is, I think that should be given, and that is valuable for law enforcement. So he does ask for performance indicators specifically. Like I said earlier, I have a plan. I've got a list. I'm going to send them unsolicited. I'll be in that unsolicited advice again. But his question was, how do we modernize the system so that doing the right things that help protect our nation and our communities is also financially the smart thing for your shareholders? And to that, I say, let's not make financial institutions the proxy arm of the government. Regulate unregulated industries. How about that? That should be the first thing. Yes, SARs need an overhaul, 100%. You must be living under a rock if you don't think there's a lot of improvement to be done, not just in the SAR form, but also in all of the superfluous requirements for financial institutions. There has to be reform. But if you're talking about a smart thing for shareholders, stop making private financial institutions the proxy arm of the government. The government does not want to pass regulation on unregulated industries. So all of that risk, all those threats gets transferred to hyper-regulated financial institutions. And I get fired up about this because this goes right, that hill I'm going to die on about regulating unregulated fintechs and payment processors in the US. But it doesn't just stop with them. We also have investment firms. We've got accountants. We've got a whole bunch of lending that has no AML requirements. So if we want to start somewhere that's a smart thing for your shareholders and also helps to shore up the safety of the financial infrastructure in the US, the best thing that would be, a good start, I guess, in returning value to shareholders is stop forcing financial institutions to carry out the regulation that you, the government, will not pass on your own. So you put it on the bank partner. That's unfair. So his final question was, how do you make sure your bosses internalize that? That being the, right before that, he had talked about corrupt money corrupts our institutions. That's a great saying. I love that. Whoever wrote that, if he wrote it or someone else, that's a great saying. Corrupt money corrupts our institutions. So his final question was, how do you make sure your bosses internalize that? And I have used this tactic since I started in this field 20 plus years ago. Become friends with a local federal law enforcement agent. Have them do a board presentation about what is happening in your community. There's a human element to this. There's always a human element. Many bank executives, board members are under the incorrect impression that this kind of stuff does not happen in their community or their financial institution, and they're dead wrong, completely wrong. In fact, this happened just, I believe, last week. I, challenged somebody who runs a large state bankers association. His statement was, all of the dirty money is flowing through the large banks. This is a problem. This is such a problem that community institutions think that this stuff doesn't happen in their community. Human trafficking happens in every community. Drug trafficking happens in every community. Okay? There's no community that is exempt from dirty money, and therefore there is no community institution that is exempt from dirty money. And that's where I think the human element is oftentimes forgotten. There's all these KRIs and KPIs, and you have 8 minutes to tell everything you need to the board. One of the things you can do, get involved with CI first, get involved with HSI's cornerstone program. Both of those will allow you to have a relationship with a local agent. The Bureau has a large outreach area, the DEA as well. Become friends with an agent. Have that agent come in and talk to your board and talk about what's going on in that community. And that makes it real, because then that board doesn't go, oh, wait, what do you mean that human trafficking has happened here right across the street? I didn't know that. And because most people have a heart, 99% of people have some type of heart and sympathy, most board members are going to be like, oh man, I would feel really bad if my kid or, my daughter or, my niece or my granddaughter, somebody was involved in trafficking. How do we prevent that, right? And then, of course, that leads down that path of having strong AML programs. But I think that human element, and that's how you make your bosses internalize that. So that is my response to Mr. Hurley on that. So I tried to keep this to the time, but I think it will be interesting. I'm glad to see somebody that's fresh and new that wants to change some stuff. But I think overall, the main thing that we need to do is make sure that we staff FinCEN. FinCEN is one of the smallest FIUs in the world when you look at the number of institutions that are under their purview. We are not staffing them because there's no budget for it. We don't have enough federal law, or we don't have enough federal examiners to review fintechs and MSBs. We don't have enough regulations for unregulated industries that transfer all of their risk to their bank partners. I think there's other things involved than just simply a SAR threshold or a CTR threshold or a SAR form. There's other larger things. So I hope that those things are tackled appropriately before we start changing everything else, because it will be similar to, putting, I don't know, a little tiny kid Band-Aid on a huge knife wound, right? I mean, it's not going to help if we just start changing these little things and not changing the overall foundation of what we're missing, which is, strong enough regulations and also people to carry out those regulations from an examination standpoint. So with that, my whole thing is we must not put cart before horse on these sweeping changes. And I will be sending in my list of effectiveness indicators. And I also have some ones that are used for indicators of ineffectiveness as well. I'm hoping that will be used, and I'm hoping that FinCEN will somehow ingest those. So all federal banking agencies are, drawing their plays from the same playbook, and that we can have a reform, but have it in a calculated, strategic manner that does not leave huge gaping holes in what we're currently doing. So with that, thank you for listening, and please don't forget to like and subscribe, and please send us an email at FinCrimeUnfiltered@illicitedge.com, or you can find me on LinkedIn at I Follow Dirty Money, and we will catch you next week. Thanks.